Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. Our guest today planned to take a 3 to 6 month trip with his family, and it turned into a 2.5 year adventure, all thanks to real estate. He has experience in construction, property management, financing, along with the 350 units he's acquired. Paul Nagaoka is with Syndicate in Kansas City. Paul, welcome to Purchase to Profits. It's great to have you on the show.
Hey, thanks, Seth. Appreciate it.
Yeah, I'm really looking forward to this. Anybody who can disappear for that amount of time, that's the guy I want to talk to.
Nice.
Yeah.
Nice,
So
nice.
To kick things off, do you want to tell us about your real estate goals right now?
Yeah, my real estate goals right now, I started a company called Syndicate in Syndicate, Kansas City. And basically it's exactly what the name describes. We syndicate real estate transactions and bring on investment partners and buy a bunch of deals. So right now I'm looking to do $30 million in real estate this year in acquisitions. I'd like to have between 30 and 40% equity in each deal upon acquisition. So at $30 million should buy me $45 to $50 million in real estate.
Yeah. And is there a reason? I'm always interested because some people have a unit count that they want to hit. Some people have that dollar volume. Why did you choose dollar volume rather than like units or anything like that?
Well, because I'm not strictly multifamily. So I do, the core thrust of what we do at Syndicate is based around commercial real estate. So, unit count doesn't really apply as well there. We still buy multifamily. I bought a hotel a month and a half ago. I'm buying another one next month. But then I'm buying, a strip commercial complex that's going to have 4 retail outlets, bar, coffee shop, roastery, and co-working space. So it's just like it's a bunch of different types of stuff that we mix together. So it's not just unit count.
Gotcha. And when you first got into real estate, where did you start off? Like, was it single family or did you jump right into commercial right away?
Yeah. Okay. So kind of giving you a little bit of scope of what I did and kind of how I got started in real estate. I started studying no money down real estate investing. Get this, when I was 12 years old. I was a weird kid when I was, when I was like 6. I wanted my dream job. My friends wanted to be firemen and teachers and that kind of thing. I wanted to take Alan Greenspan's job as chairman of the Federal Reserve. When I was 8, I started investing in the stock market. And when I was 12, I started studying no money down real estate investing. And kind of back then, you'd go to these really expensive seminars, spend a bunch of money, and they'd give you books and tapes and that kind of stuff. My mom would go to them, and she'd bring home these cassette tapes. And I'm no kidding, pop them in my Walkman, and listen to them and learn about leverage and all that kind of stuff when I was a kid. And then after high school, I started a company and small, screen printing company, what I had access to at a high school, and then took the money I made from that, put myself through college, and got started investing in real estate. Started buying single families, became a loan officer and a real estate agent, kind of put deals together, get an equity piece, put a little bit of my own capital in them, and started there. And then over a 14-year period of time, bought 350 properties and units and built a team of 35 and kind of had all the different verticals of real estate in-house. I had a construction crew of 15 that worked for me. I had an in-house property management company, had accounting division. I had a broker on staff, so we could kind of do the full cycle.
Yeah.
And yeah.
Yeah. So what's the end vision that you have in mind with your real estate investing? Everybody's answer is always a little bit different. Like 10 years from now, like what does it all mean?
Seth, that is, now we're going to get into like a completely, I'm not sure if this is where you want your video cast to go here, but, that was a big question for me and why I took my trip. So I was doing that and I bought a bunch of units and bought a bunch of properties and kind of was getting to the point where I didn't necessarily have to work anymore, if I lived simple, and decided, I wasn't really enjoying what I was doing, to be honest. And I wasn't feeling a lot of meaning in it. I was maybe working 15, 20 hours a week, but I was doing all the stuff like, the top level evictions that were difficult, arguing with municipalities over zoning and haggling with, lawyers and doing all the parts of the deal that weren't fun to me and that I didn't enjoy.
Yeah.
And just like, what am I doing? Like, why am I doing this? Why is this worth it? And decided to take this 3 to 6 month adventure. My wife and I always wanted to do it, and we talked about it for like 10 years and never did it. And then finally, we're like, we either got to poop or get off the can, because time's going to pass us by. And so we did it, and we essentially shut down the business. And I sold 250 properties, gave 100 of them to property management companies that could manage them, so I could do it from a distance, and took off. And that 3 to 6 month trip turned into 2.5 years, and got into all sorts of weird stuff, man. And traveled Asia, saw a bunch of the world, and just try to like find what my passion was. I got into modeling, and it's kind of fun, and was nominated top fashion model of Asia for like 2016. And then I got into acting, TV show hosting, and I booked like 9 different TV shows and 15 commercials, and like did all this stuff, and got kind of, famous in Southeast Asia. And then got my wife pregnant with our second kid, and we wanted to live in the States, and moved back to Kansas City, and just really reevaluating like, what is it that I really want to do, and been asking that question myself a lot. And ended up getting back into real estate, but did it differently this time, where I'm more focused on the parts of the deal that I really like.
Yeah.
And I think that's really important for people to really realize that real estate, there are so many different facets that you need to learn. You need to understand construction, you need to understand property management, you need to understand brokering a deal, you need to understand accounting, so that you don't ever screw any of those components up. But you can't be excellent at all those things, and you can only be really world-class at one thing. And so you got to figure out what that is inside the scope of real estate, and focus your efforts on that. So for me, that is identifying deals, creative finance, and kind of putting all the different moving pieces together. So yeah, that's kind of a part of the deal that I really actively enjoy. Like I love hunting. I love finding the deal, doing the creative, weird stuff to be able to make it work, finding opportunity where other people don't see it, and kind of bringing it in. So long way of saying, what are my goals around this? Why am I doing this? I'm doing it because I feel like it's become something that I really enjoy now. I actually actively enjoy it. I'm very good at it, Seth. And it provides well for my family, and I think long term it opens doors for me that other types of things can't open for me. I would love to see how successful I can grow Syndicate. If we hit our $30 million target this next year, we'll be the fastest growing company in Kansas City, or fastest startup in Kansas City. So that'd be pretty fun. Yeah. So end game really is a lot of those things. I don't need a lot of money. I don't dream of owning private jets and doing all that kind of stuff. Rather live kind of simple and give a lot of money away and help other people. So, does that help? I don't know. Does that help explain it a little bit?
That's a really good answer. And I have to say, this is the first time you've had a model on the show. So our viewership in Asia might get a boost. So.
Yeah, to be fair, I just got off 3 days of intense food poisoning. So I was expecting this to be a video call or a phone call, not a video interview. So sorry for.
Oh no, it's all good. And actually, I think you brought up a really good point, because there's lots of people out there that have built a real estate business, but they just feel bogged down by all the stuff that they don't want to do, or it puts them in the wrong mindset. So what would you say if somebody's watching here, they're kind of feeling the same way you were? How did you go about building that team to support you on the stuff that wasn't either your forte or your passion?
Seth, that is key. So I completely believe in it. Like, I really am of the mindset now, because before I was kind of, I don't know if greedy was the right word, but I needed to hit that home run. I really wanted to like do that deal that was going to get me out of the rat race, and that was going to, really provide that equity and get as much of the equation as I possibly could. So I didn't outsource anything. I kind of brought it all in house, and, I called it vertical integration, Andrew Carnegie's theory of vertical integration, and thought that was smart. And really, that was really dumb. I think the way to make true wealth in real estate is to find your talents and then learn the other elements, but then build yourself an incredible team. And that's what I did this time around. So I think part of that, for me at least, is I have 3 other partners in Syndicate. and people I trust, a group of people I've done business with over and known for over 6 years. They have 17 years experience. One guy's an operator, loves that, loves managing construction, loves seeing an ugly project turn into a beautiful one. Loves like every detail of that element. We did an apartment project together, and they give us a report that's 14 pages long that goes through your summary, and then it goes through the deposits, and then it goes through your balance sheet, and then it goes through the physical checks that got deposited in each. And he wasn't happy with the management company because he said there wasn't enough detail on it. And so you got to find guys that just love different part of the equation. And so I'll tell you right now, like, it's not worth it to me. Like, there's no amount of money in the world that is worth it to me to like own that part of the story, but someone else loves it. And so you got to find those people. And then my other partner, she loves the legal side. So God bless her, like we're doing a syndication right now. I have 8 different partners. We're buying this super, super awesome deal, but we got to get all of them to, agree to terms on the operating agreement, in the next 2 weeks so that we can fund the deal. And it's like herding cats. And somehow like she actively likes that. And I don't know why, but there are just different people that love different parts of it, and you have to get top level people to own those parts of the equation that you can trust.
Yeah.
So how do you do that, I guess is the question, right?
Yeah. And like right now you're building up your company, you're having some good growth. Do you have any routines or rituals that you follow that keeps you focused on achieving that high level?
Great question, Seth. Yeah, I think something for me that I've tried to own is do the hard things first. So I literally have a checklist in my phone that goes through daily habits that I want to do. And from taking care of my health and what I do in business in different areas. And one of the things that I do is I do the hard things first. So whatever it is that I am ignoring and don't want to do, that's the thing I do first thing when I get to work. So, last week it was building a deck for a project that we just got under contract, and building the 3 pro formas I had to do to be able to model them all correctly and stick them into the, so whatever it is that you absolutely don't want to do, it's not as bad as 90% chance is not as bad as you make it out to be in your head. And once it's done, you're just going to feel free from all the weight, and you'll be surprised. Like, you don't actually, I'm doing a lot, $30 million of deals a year. That's a significant amount of projects. And I'm keeping all those balls juggling. But since I'm really focused on not wasting any time and really doing the most difficult parts of it first, the most uncomfortable parts of it first, I can still work a normal life, a normal job, come home and have time with my family, be home by 5 o'clock for dinner. So you'd be surprised what not procrastinating and taking on the difficult challenges first does.
Yeah. And as you were making that transition you started off in that single family space and transitioned up to the larger deals, what changes in your mindset did you have to make about yourself to allow you to bump up?
Oh yeah. I remember. Yeah, man, dude, you're loaded with these great questions, man. A lot.
Yeah.
So I think something that was hard for me was like thinking, $1 million is a lot of money, Seth. It's a lot of money for someone to have. But when you do a real estate deal, like whether you're doing $100,000 or you're doing $1 million or 10 million, scaling up is not that different or that much more difficult to take the next step. And that's a mental block that I had, because I did I was buying like 40 single family houses a year for a while there. And the amount of work it takes to do probably 4 single families is about the same amount of work it takes to do an apartment complex. Yeah. So, granted, there are different complexities, and you have a different tier of competitor that is trying to do it. You really need to know what you're doing. You need to cut your teeth on single families, or, work for a syndication company or something to get a little bit of experience under your belt. But it's really not that much different. And probably the biggest regret I have is that I didn't step up into larger projects with more confidence sooner. I didn't start doing that till 7 years into my career, probably. And and there's just a lot more money to make, a lot less work to be done on each transaction. And you can do 1 or 2 large deals a year in the same amount and profit the same as me doing 40 individual single family. I mean, how many purchase and sales agreements that is? That's 40 trips to the title company, man. That's just on that side of it,
Yeah.
And then running 15 guys from house to house to house to manage. I mean, ugh. So.
Yeah. And I found interviewing the guys who are playing at that high level, they all say that the bigger deals are more simple and they're easier and they're also more profitable because of that.
Yep.
Yeah.
Yeah. Couldn't agree more.
Yeah. So of all the deals you've done so far, is there one that stands out as a Keystone deal?
Yeah, I talk about this deal a fair bit, but it's just because it's one that sort of changed the trajectory of of my career. It was my second large deal that I did, but I did it with the people that I'm now partnered with in Syndicate. So it's a 72 unit apartment complex. This is where sort of the creative finance and those different elements kind of come into play, but I didn't have the credit to buy it. I didn't have the cash to buy it either. I had like probably 80 or $100,000. Yeah. And, I sat down with a guy and I saw a good deal and I was like, hey, I can make this happen. Seller finances to me, I'll give you $80,000. And anyway, after, 3 or 4 conversations with the guy and the process with him and his wife and taking him out to dinner and this whole thing, they agreed. Some crazy
really?
reason.
That's great.
Yeah, I did. so I picked it up, but I mean, it needed, so it needed a lot more than that. So I bought it for 1.5 million, gave him 80,000. I think it was 80,000, maybe it's $100,000 down or something. And then started raising money for it afterwards. Totally the wrong way to do this. You got to raise the money first, but all the stuff you learn in the process. Started raising money and then realized it'd probably be easier to take on a partner on the project, and reached out to a guy that I knew was doing a lot of deals, and we ended up partnering on the deal, and basically leveraged his credibility and his balance sheet to finance the project. And we put in another $600,000 in cash and put $2.3 million into renovating it and all the different soft costs. Kicked everybody out, fixed up the entire building, and raised rents from $350 to $700, $600, yeah, and refinanced it, pulled all of our cash back out of the project plus some, and now we have this nice cash flowing asset that was a really good deal, and it was kind of the marker that sort of shifted me from going, let's do the single families, or let's do this really large project that I do all the different roles with and own every part of it and raise all the money and do all the different components, to it's smarter with smarter people. It's easier and better and smarter with talented people. So that was a mile marker for me.
Yeah. And 2 things that you mentioned there really stand out. The first thing is you recognize that you were better off partnering with somebody who could bring their credibility and their experience. So that was huge. And the other thing, what was the other thing? I had 2 things. Now it's slipping my mind. So the partnership was huge. And then, the other one was you saw the good deal and you acted on it, even though you weren't following the right process, you still took an action to put that deal under contract.
Yeah. So I think that's probably one of my strengths is I'm an action-oriented guy. I don't over-process. I do my homework. I do my due diligence. And when I feel like it's a safe risk, I'm not afraid to take it. Yeah. And I really believed, really, I brought this other guy on for his bankability. I had a lot of experience up to that point. I really knew what I was doing. I knew I could raise money. I knew some of the different components of it. It just was easier to have someone else in it. So, I didn't start with that project and get myself involved in something that was just way over my head. It was larger than what I was used to, but I had a high degree of confidence that I could pull off the deal. Yeah. So, I guess. Does that answer that question?
Oh, absolutely. And with this deal, how did you source it? Was it listed through a broker, or did you contact the seller directly?
So this was listed through a broker, but a lot of deals that you find now are off-market deals, and you have to be out hunting and really to be able to find a deal. Like for us, we only invest in deals that we can get our investors' money 100% of it back. So we don't invest in deals unless there's that kind of upside. So we're talking 9 at the lowest, 9.5 to 10, 11, 12 cap type of deals. So you don't find those kinds of deals just on the sitting out there on the market. So you really got to hunt that stuff out. But the one thing you can do that I've had a lot of success with is being able to identify opportunities where other people don't see it. So to give you a good example of this, the hotel I bought 2 months ago, about 2 months ago, it hit the market and I was first one in the door, or actually no, I was about 11th in the door, and I was on the second day of it being listed, or first week or whatever of it being listed. And I knew that it was a really good opportunity. So I ran my numbers and I felt high degree of confidence, amazing location, spent way too much on the renovation, and it was just awesome. So I really pushed the listing agent, and I know usually when I get face-to-face with a seller, I have a lot higher chance of converting a deal. So I pushed her to get a face-to-face, and it worked out. I sat down with the guy again, talked the guy into doing a crazy seller finance deal. I gave him $100,000 and he gave me 92% financing on the deal. But I gave him $50,000 over listing price when I bought it. Yeah. And then after I got it under contract, another property that was similar hit the market, and for 40% more than my even $50,000 over asking price.
Nice.
So I knew I found a deal that was undervalued, even though maybe other people didn't see the opportunity and, hey, it's list price or it's whatever. No, you got to base it on what the numbers really look like on the project and how you can add value to the deal. And, another property I got under contract on Friday was this really nasty, dilapidated looking building that the guy was willing to sell for me for the cost of the land. So, it's nasty, it's ugly, it's all this stuff. But, when you have that kind of a large budget to spend in renovation, you have a little bit of confidence in your ability to do the construction. There's upside there. So you just got to find opportunities where people aren't able to see it.
Yeah. And I think somebody watching might be wondering, you mentioned that hotel, there were people in the door before you. And so there was obviously interest. What do you do to present that seller financing component to the seller? Because that, some people struggle with that and getting that part of the deal.
Yeah. So, I think you have to have a good story and good reason, right? So if you're showing up, just think, would you trust yourself with this project? You gotta have a really convincing argument of why it's worth it, right? So first of all, I gave him $100,000 down, so that covered his cost for his broker. It covered any other elements of cost that there could be associated with that, and plus a little bit of profit for him, right? And then I gave him a deed in lieu of foreclosure, so that if the event were that I'm not able to pay, that he could take over the property like that and avoid the foreclosure process and be able to have the property back immediately. And then I'm giving him $50,000 more than I was asking. So when that meeting that I was having with him, what you want to do when you sit down with a seller is really figure out the moving pieces that really move that guy or girl, and figure out how to touch those points. So you're really trying to pull that information out. So you do want to come in with a prepackaged offer, a top amount you're willing to pay, and what a structure you can come up with might look like, but you really have to listen. So in that meeting, I found out that price is really what this guy cared about. So he had enough money. He had it paid off free and clear. He had there were no other elements that really mattered. Closing time didn't matter. A lot of those different components didn't matter. He just needed to be with somebody that he trusted could do the deal, and he wanted to get the most he possibly could. So giving him $50,000 more than he was asking, really kind of pushed the needle for him. And then I squeezed him on timeline. So I knew there were 11 other people that looked at it that week. I knew people were going out trying to do their due diligence with the city and get all their ducks in a row there first. So what I did is, as opposed to doing those components first, I put in a lengthy due diligence period in my contract. And I said, hey, look, you got the weekend or I'm going to have to move on to the next deal. And so he came back at the end of the weekend and said, I want to take it. And, I'm sure if I would have not been firm about that, he would have kind of pushed me around and waited to see if any other offer comes in. And I'm sure he would have gotten a better offer than mine.
Yeah. So that's a really good example of recognizing how you can merge terms and price to make a deal fit for both sides. I really like that example.
Yeah. And I really believe, Seth, that you can create win-wins for everybody. Like I try not to do any deal unless everybody's winning. So you just got to hear what someone's looking for, because a lot of times, like you said, like you can move the pieces around and kind of play this puppet master kind of thing to be able to get everybody winning. So, someone says, I just need the money quickly, and a lot. You can create a structure that could work for them, that could also work for what you're trying to do. And if you can't, you just, you shake hands and say, hey, let's be friends, and
Yeah.
good luck selling it.
Yeah. Oh, that's great. And so how has getting involved in real estate changed your life? Now, this question for you might be a little bit different because, you were doing that a long time ago. So
Yeah, well, I mean, it completely changed my life, right, Seth? So, I mean, having the option, the freedom to, and I don't want to sound like but to be able to travel for 2.5 years and not have to worry about, not have to worry as much about money, is amazing. And, having that cushion, people my age are working really hard, and maybe they're making decent incomes, but they don't have any equity, they have no assets. And to be in a place where a lot of that is really taken care of for me is an incredible place. And it's a place where you get to become a blessing to other people, as opposed to just having to think about yourself. And that's part of the thing I'm excited about using the real estate and making the money is, kind of this idea of, my faith's a huge part of my life. And, I really love giving, and I love being able to support things I believe in across the world. And, so it's an amazing thing to be able to do that. So I would say, yeah, that's probably the way that real estate has moved me the most.
Yeah, that's huge. So Paul, where can people find you if they're looking for some more information about your company and yourself?
Yeah, sure. So if you are an accredited investor and you want to explore investing in opportunities with me, you can find me at syndicatekansascity.com. So syndicate, like you spell syndicate, kansascity.com. Space on the bottom for an email address. You just stick your email in there, and I'll be in touch with you, or one of my partners will be in touch with you, and we can talk that out. And then also, if you're just interested in learning about real estate investing, so Seth, I started, and I'm starting a website that is just giving a lot of the brass tacks of real estate investing. So no stories, no motivation, but just like understanding cap rate. How do you hire a contractor? What do property? All the stuff that my mom paid an exorbitant amount of money for in conferences, I'm going to do and give away for free.
Nice.
So it's in its infancy now, but it's how to invest in realestate.net. So you go there, there'll be a video, you just put your email address in, you get access to everything for free. And yeah, so those are probably the two best ways to find me. Or you can find me on Instagram or something else, but you're going to see a lot of non-real estate related stuff there.
I'm sure. So I'll make it easy for everybody and put those links right below the video so they can just click. So that's great.
Awesome.
Yeah. Well, Paul, I just want to say thanks so much for taking the time and sharing your real estate success with us today.
Yeah, absolutely. Thanks a lot, Seth, for having me on.
Yeah, you're very welcome. And to you, our viewers, I wish you well in your journey from purchase to profits. See you next time.